Yo, good morning, everyone. Good morning, good morning, good morning. Back to business, right? Shit. I can't wait till my freaking fingers are not broken. It's so annoying. But yeah, hopefully you guys had a good day yesterday. I got bad allergies right now. But yeah, hopefully you guys didn't do too much craziness yesterday. Seems like things snapped back in line really with what the initial objectives were. That being basically this holding, right? Not breaking this low, displacement above here, leading to this high getting taken, which then set this in motion as well. And we just kind of flew right to it. So the whole analysis that I did on the DXY, the indices, currencies, right? It's absolutely steamrolled through the objectives that I had outlined well in advance. Yeah, we got this big run, but hey, it is what it is. You know, this is a pretty large move, but you know, wasn't really too crazy. Let's see. Extend. I don't want to extend it. Okay. So yeah, when it comes to this, it's my clean chart, so I'll keep it clean. Again, I don't see anything going against shorts. We have a buy side delivery here, just peaked above the high there. The balanced price range that I outlined, which was this here. So yeah, let me see. Yeah, I think I'm going to start, if you guys haven't noticed by now from yesterday, I'm going to start cutting the videos that we do live. I'm going to start cutting them, and then, you know, for each asset, I'm going to drop that analysis. Just for those that may not be able to be here for the live call. If you go and look at the two videos I posted about DXY and the Nasdaq, I mean, it's shocking over the years how accurate we are. Even in a time like this, everyone's uncertain. They have no idea what to expect. We do. You know, it is higher risk. We could get it wrong, and you know, there's no denying that. But I mean, it's just amazing. Honestly, never ceases to amaze me how accurate we are. So we got sell side, buy side in here. Do got a wick right there. I want to copy that. There's no news today, by the way, if I'm not mistaken. Yeah, no news. So low probability day. It's kind of just the way that it is when it comes to these types of days. So don't be too aggressive. And, we'll look to try to see if there's an opportunity that we can engage closer to the open. It is NFP week after today. Things could start to get a little more chaotic. Damn, okay. Gold took a pretty steep dive too. I guess gold is like the only thing that has kind of went against. You know, I wanted to see this hold here, take a nosedive, hold up in this, and then continue to rally. You know, depending on how we close within this low, within this fair value gap here, and in comparison to this order block, It's going to be a pretty solid deciding factor. It looks like it attempted to get into this breaker here. It's also an order block. Ah, I see what it did. It's liquidity void. Well, it's a new day opening gap actually, but is it a new day opening gap? I think so. I can't remember if they have new day opening gaps on gold and silver too. I think so. In the futures contract, I think because it's futures, it has all those components. I know currencies do, right? Currencies have, a lot of these things when it comes to the futures contract. Fix that problem. I don't know why it doesn't populate on gold and silver. Populates on gold. I don't know. So yeah, the only thing that hasn't went according to plan is gold, right? But then again, seems like we're getting back in symmetry with one another. Populate here. I don't know why. I don't know why it doesn't populate. I don't know why this indicator doesn't populate on this. But yeah, nonetheless, nothing changes until something changes. So our whole target has basically been met, right? This breaker here, respected. We had a huge gap because of the war. So, damn, we went right to the target that I mapped out. I said, this little piece of the gap is inefficient, and we were in a hurry to get there. Pretty nice. What else? What other observations? So yeah, it looks like this is just going to continue. If the dollar keeps going higher, we will see that continue. This order block has been violated, so we can now look at this as a second stage distribution. I mean, it kind of already delivered away from it, so I don't think it's going to try to come back much. But the objective is this high up here. Yeah, so it's pretty solidly upset the entire sell-off for the dollar, right? We're watching these levels to see how responsive they would be. I did talk about this order block in here. Talked about this wick. I talked about the fact that we came off the low. I said that how it treats this order block and this up movement here, this breaker, if it breaks outside of that breaker, which it now is, on that weekly perspective, we will have then switched the overall narrative to bullish. Okay, because it's quote unquote flight to quality, right? So when there's crazy chaos, a lot of times they try to run to the US dollar, especially when the yields start to pick up. So yeah, we got this run on stops here, immediate response. Just goes back to the drill that I talk about all the time. Let me see. Yeah, it just goes back to the drill that I talk about all the time, or have talked about all the time, where you look at the higher time frame levels relative to the liquidity mapping list, and you go look at those higher time frame levels. Everything above a daily chart, you look at daily highs and lows, weekly highs and lows, monthly highs and lows, quarterly highs and lows, and then you just observe, right? When price taps those levels, what is the response generally when price takes those levels? What does price a lot of the time do? Does it continue? Does it just fly back to the upside? Does it consolidate? And doing that, little drill, it kind of opens your eyes to how price behaves when it tags some of these liquidity pools and what your expectation should be as you walk forward, seeing price do some of these things. The hell? That's weird. So yeah, we got the bonds declining super aggressive. And you can see everything seems to have now kicked back in symmetry. So that's nice. That's amazing. So we can faithfully trust the short positions. You see the 50% of that daily wick tapped into. Let me see, where's my chart? There it is. See, I'm going to keep my attention down to that there. And we'll just keep going. We'll keep pushing price lower. Okay, we got low, high, lower, low. That's a order block, if I'm not mistaken. Got the wick in there. We'll use this one. Actually, I think I'll use that one right there. We got the new week opening gap. Got a level here. Got one down there. There and there. So if we take that, scrunch this up a little bit. Got price delivering pretty nicely. It's continuing. All of this up movement to down movement was manipulation. We set the high of the day or high of the week. Prices declined pretty aggressive. That's a large range. Maybe it gives us a problem because large ranges lead to small ranges, but it looks like we're finally breaking out of this level, right? Or out of this range-bound environment. They just went up one more time for good measure, tapped into the order block, tapped into the inversion, and then continued the decline that we had an assumption about. Right, once it broke this fair value gap again, I said that's our change in state, and it could potentially take this. If it takes this, and it meaningfully gets through that, it'll target this, and then we have low resistance down here as well. And it basically treated it as such. Okay. So yeah, nothing has changed in my perspective. We'll continue to look for shorts. That's what the narrative has been. So we got a stop run up here, inversion fair value gap. Open prices up here. I don't think it's going to try to get all the way up there. We'll use the 630 open price as our continuation power 3 dynamic. And we'll go off of that to frame setups off of. We do have, let me actually take the extended area off. So this is that wick. We've got a new wick opening gap level here. I'm not going to look all the way back and figure out which one it is. I could really care less. I guess, it's got the date right here. $28.11. Not sure what that is. I think I have a setting wrong. Nonetheless, it's from a while back. It's from like way over here. So my attention is down here, you guys. We're going to look for that. First and foremost, though, we got to take this low out. Let's see, can you guys see that? Yeah. So we just got to take that out. So if we kind of scrunch this together, because we're pretty much aware of what we want to see this do. Go down to the 1 hour, big market maker sell model, balanced price range. So we shouldn't get beyond this high. This should act as an intermediate term high. Lower high to the left. If it creates a lower high to the right of this high specifically, that'll be great. It's also a 1 hour inversion fair value gap, ironically. Drag that over there. See? So again, my intention is to see if we can just keep going lower. Narrative has been correct. We've been calling for shorts. Talked about DXY. It gave up the ghost, so now it fully confirmed what the analysis was. We favored trying to see it hold, but we drew a line in the sand at this low and then said that once it breaks this high, if it can displace, which it did, we got to look for this and then potentially this as a market maker buy model. And it seems that we were pretty solidly correct in that assumption. So now we got some of these other levels, currencies. Every asset that we talked about except gold and silver has pretty much went exactly to what we said it was going to do. It's actually a good thing that gold and silver are dropping because that goes in line with the yields, right? Doing the opposite. And the bonds taking a nosedive. So that means we're in a pretty symmetrical potential sequence, right? Or trend. So, we should be able to see some reasonable price delivery in here. Is SMT at the highs here? You see that with S&P? So yeah, if we take that information and then we just drop down, actually go throw some of these other observations on. Where's my clean chart? So yeah, we're going into the macro. I see us potentially forming a, is that the 15-minute? No, it's a 5-minute. I see a small market maker sell model in here. So I don't really see any reason for us to think that that won't be reliable, except the fact that it's still pre-market and there's no news. So they may wait for the 6:30 open to make a serious move, right? The actual move. If we move up a little bit, I like this fair value gap in here. We got to remember that we're inside this string of new week opening gaps too. Let's get that in there just so we know. And we got the rejection from this 1 hour fair value gap. So again, if this is going to be a sincere decline, we should be able to see that respected. Maybe they open up, for the 6:30 open and then try to get up above, take this out. But we don't want to see this get taken out again. We've already delivered buy side, stopped out early sellers. Anyone from last week basically ran up right above that high by a tick right there. purposeful. And that, ironically, was Friday's high, huh? So it seems that Friday's high is being used as counterparty liquidity for the decline, at least for now. It's Friday's high. Now we got this low down there, so very large gaps for whatever reason. Well, for good reason, right? There's a lot of things happening. But yeah, my perspective is what it is. I'm not going to change it. Everything we talked about on Sunday applies to today, right now. So yeah. We'll see if it can continue this rampage. If we go to 2-minute chart, get a little bit closer to price. Pull this over a little bit. Because we took stops here, I mean, isn't it amazing to see how our observation in this level is being treated so beautifully as a balanced price range? Isn't that just like incredible to see how precise that is? I mean, it's phenomenal. It went right up to that and just didn't go any further. And this was our invalidation. Remember, I talked about this accumulation, dragged that over. I'm like, if we get up beyond that, that'll be a problem, and we'll stop going lower. We may see a market maker buy model start to unfold. But because the narrative is bearish and it needs to stop, and this is such an important level, I mean, price proved it that it's important. Look at it. If it was random, there'd be no reason for it to do this. But it clearly is respecting it. So what we're looking at is clearly important because of the reasons we've talked about. And, you know, the things ICT has shared with us. But yeah, it's amazing. I mean, it never gets old. Like, seriously, it never gets old. See this stuff happen over and over. It's very, very liberating. Okay, if we go to the 1-minute chart, get a little bit closer here. We do have a stop run in here. I would have preferred that they didn't take stops there. If this is going to go lower, which I think it will, we can grade this price swing. It's a small grade, right? Small graded price swing. But nonetheless, if it's going higher to go lower and you have a market maker model, you could grade the price swing. In the larger time frame, it's bearish, right? So looking at this as a market maker sell model, aiming for the lows, which is London's low, just makes sense. We got second stage distribution down here. I think this is potentially the first one, but we really don't have a lot of separation. It's just like displacement, kind of slow movement, then displacement. We have our higher time frame PD array, right? That's used for the smart money reversal, right? To frame the smart money reversal. We actually have a breaker here. So that's interesting. And now we're in a potential second stage distribution after we responded from this level. We're in the second stage distribution, potentially going into the 550 macro with, I believe, DXY falling, if I'm not mistaken. My stomach is screaming at me right now. Freaking hungry. I don't know why this doesn't just populate my chart. Like I tried to get it to do it. What the hell? Okay. So DXY is again running higher. This is a potential order block, potential breaker. We got inversion fair value gap here. That is beautiful. Unless it breaks that. This inversion, I believe, is on the 5-minute. Yeah. So that's a 5-minute inversion bearish fair value gap. Okay, and it's a market maker sell model, second stage distribution inside the macro. So it's beautiful. Do you see your model in there? Time and price are aligned. Higher time frame is aligned. Market maker model is aligned. 5 o'clock power 3, open price. Price rallied up above it a little bit. It's now declined as a result of this 1 hour fair value gap response to go lower. And then we got the different levels in here. Let me make this a little bit bigger so it stands out. So this is the wick on that higher time frame. I believe it was, is it a 1 hour or is it a 4 hour? Where's that wick at? Oh, it's right there. Whoops. It's that wick right there. Alrighty. So yeah, look at the response. The fair value gap here is overlapped by a daily wick quadrant in a second stage distribution potentially, or just the distribution in this market maker model that has one, because it seems like it's in a hurry. So I'm very much behind that this continues. So again, you got to ask yourself, do you have your model in play right now? Is it there? Time and price are in alignment. It's the early macro, so it's a little bit more risky, but everything's looking like it's doing what we want it to do. Nothing has told us otherwise, so there's really no reason to be too concerned about it. An engagement is it's not something discouraged from this little area, except you're not, I don't encourage you to take trades just because I talk about something, but you make your own decisions. But honestly, like I said, I think that we will continue to drop unless something catastrophic happens, which I don't think it will. I think I'm going to take off the extended. So we've got another quadrant in here. So this 5-minute fair value gap in here, again, is overlapped with that daily 50% of the wick. And it looks like it's in a market maker sell model. And it, on the higher time frame, looks like it's bearish. And we got a balanced price range above us. And dollars accelerating to the buy side. I mean, this is what high probability looks like, right? And we got intermarket relationships agreeing, and the bonds and yields are in alignment. They snap back. So it should be very nice. It should be smooth sailing. The only issue that, is hanging over our heads is the fact that it's NFP week. But it's Tuesday. Monday and Tuesday are generally more forgiving on NFP week. But we'll see what happens. And the fact that there's no news, right? At least for today. There she goes. It should be second stage distribution. Or not, well, I mean, you could kind of map it out like here. But when you move up in higher time frame from this 1 minute, say to like the 5-minute chart, you really only have one accumulation on the left side. So consolidation, accumulation, smart money reversal, low risk sell, and then distribution. And we should be able to get it to drop down there if it is going to be what we're claiming it is. We already took stops up here, so early sellers got taken out. London did, pretty solidly take out this main target, so it is a higher time frame level being tagged. So we got to keep that in mind. But as long as this fair value gap and this structure stays in place, we continue to respect these levels to the downside. I'll stick to the fact that there may be continued shorts unfolding. This is a very large range previous day, so that does have to be considered. But we'll see. And we'll see if we can finally get our follow through. Got buy side, sell side. So ideally, we don't even attempt to try to get back up into this new week opening gap. That's what this green box is. So yeah, we'll continue to monitor that and see what happens. Got a wick in here. If order flow is going to continue to support bearishness from this 5-minute chart, we should close continuously below things like this, This is a really balanced price range. So unless it's going to turn around, we should honestly not even really require it to come back up here at all. We should just continue to melt because it's balanced. And again, you got to ask yourself, is your model in play right now or is it not? There is SMT down there, so that's interesting. Damn, the Dow picked up, huh? Stay below that level. So hopefully you guys are calibrated. Hopefully it's clear enough as far as what we're looking for. So we'll see what happens. And what I said about this level here. Got an order block in here. If we can take that out, this is now an order block with a daily wick quadrant. So with that daily wick quadrant and that order block together, should end this response up here at this 1 hour inversion, we should be able to see price pick up a little bit. And if it doesn't, and say it hangs around, maybe it chops back and forth a little bit in this level, we are very close to the open price, so they may require it, especially because there's no news. So that's always a risk when you're trading on a day that has no news, especially after a large range previous day. The thing is, we've been in such heavy consolidation for like weeks at this point. and it seems that we finally have attempted to break out. So, and everything's in terms of correlation, it's all aligned. So that gives you a pretty early sign that conditions may start to clear up a little bit. But with the war and all this stuff, I mean, it's the expectations probably best to be set at it's going to be a more chaotic time. And if it fails to do a follow through, just aim for 20 to 30 points. There's really no reason to go above and beyond too much. Don't be fearful. If you can get more, then get more. But we've had back and forth ranges. There's lots of opportunity, obviously, inside these huge ranges. But at the same time, that just because they're large ranges doesn't mean they're like a trending large range. It's just back and forth. We are starting to see signs that like things like this bearish breaker, which is also a bearish order block, and a daily inversion fair value gap. Those things have held up in here. So that's a pretty clear sign from this daily chart that, off this high, we should continue breaking down below this low, treating it as a breaker. We have an order block in here too. So one change in state, second change in state. So we should treat this as a very sensitive point of interest, right? This wick here, this wick. Let me actually recalibrate this a little bit. I got like really bad allergies this year. Don't know what's happening. It's starting to get hot where I'm at. Like just out of nowhere, it's like 80 degrees. I'm like, yo. Degrees Fahrenheit. Most of the time, that's a good temperature for people. I need like 60 degrees, unless it's like early in the morning. Throughout the day or going to sleep, I need like frozen ice box. Are you guys the same way? Or do you guys like it hot? You guys like it hotter or colder? Colder. It's easier to warm up than it is to cool down. At least from my opinion. So I have the AC on constantly. Like it'll be 70 degrees outside and I got the AC blowing. Yeah, it seems like it's reluctant to really take off. It's making me feel like we may wait. We may get this little stalled out effect, right? Start to react pretty strongly from this area. But then it's kind of slowed down. It's the daily wick. Crap. So yeah, I'm still behind the fact that this is going to tank. Still inside the 550 macro. I'm very curious to see how fast this can go. All of this buy side to sell side should be balanced. So we shouldn't even try to attempt to get this high, actually. We should just continue. See what she does. I like that wick too. See how that wick's being respected? Yeah, breaking down below this, that'd be nice, because then we could use that as a bearish order block too. Sure is kind of stalling around that level. You see why the macro here, the 550 macro, is called the unreliable macro? It's slowed way down. So now we're in the start of the 6 o'clock candle. Got the open price here. It's either going to try to maybe attempt once more, get us up above that open price. Remember, timing is everything. And when you're before the open and there's no news, it can sometimes be a problem. So that's why we wait. So let's see how it treats this open price in here. Are we going to still respond to this? Got an order block there. 15-minute. Oh, we got a nice fair value gap in there for the 30-minute. Kind of in between two, huh? Well, let's see. Was that just a stop run to get us above the open price for the hourly power 3? Got a low, high, lower low. If it breaks this low, this candle becomes a bearish order block on this one, or a bearish breaker on this 1-minute chart. Got a low here, high, lower low, staying below this high here. That started that decline. And again, all of this is underneath the larger perspective. The price rallied up, tagged buy side, Friday's high, and now we've ripped their face off going to the other way. And we took out a significant liquidity pool previous week's low. Yeah, it kind of came right back down into that, huh? Tapped it. It's having a hard time getting back beyond that, at least for now. But again, time, then price. You know, vitally important, because you could see something, and if it's not at the right time, the algorithm runs off time. So you got to put yourself in the best position timing-wise, and many times it has to do with the macros after the open prices. But yeah, we're still in this market maker sell model, so I don't think we're gonna have to get too deep. You know, it's fine if it wants to hang around like this. It doesn't upset anything. We can't get above this. If it breaks this, that's a problem. It should be able to open up here. Not sure if it's going to want to do it before the open and tag that low. I'm not too sure. You know, if we take out this this low here, though, yeah, I think that we could slide. It's potentially high resistance because we took the stops here. Now, if this was a failure swing, it'd be a lot more likely that it's just going to fly. But because it didn't, you know, it may present us with a slower delivery down into it. But that's our objective. We're looking for that low. It seems like we're going to get it. Got a mitigation block in here. See the 6 o'clock power of 3. So yeah, let's see how it treats that. Again, I'm gonna wait. I'm gonna wait till 6:30. Yeah, very much has slowed down after it was kind of fast. Just it's typical. Very, very fast, wild London. So you got to take that into consideration in terms of expectations. But we have broken out of this larger consolidation and everything is in sync. So, we'll see. Do they want to hold this and then maybe run up, attempt this one more time? Maybe leave that high. I'd prefer to see it leave that high. And then continue to treat this as a balanced price range. Or is it going to, offer something in here and not have to get up there? If it doesn't get up there, that tells you that, it's really, really bearish. We already know it's really bearish. But, something like that where it can't even attempt. I mean, it has taken stops here. Right, but it's just the timing is too early. We're too early. It's definitely holding itself, huh? It's back and forth. So yeah, with this type of delivery showing, if you weren't sure if you were going to wait, you absolutely are being told that you need to wait. It's funny because dollar is accelerating pretty aggressively. Yeah, dollar's really accelerating to the highs. Damn, we got the Dow just woof. Absolutely on a tear, huh? Crazy drop. Look at that. Hundreds of handles in this one candle. 48,900 to, damn, that's almost 1,000 points in one day. Holy crap. Holy crap, dude.
the hell? And the Nasdaq's went almost 650. Yeah, that's a huge range. Today's AM session may be a little sketch. And after all this speed that we've just seen, you know, large ranges lead to small ranges. After a large range day, you got to be cautious about trying to go with it because everyone's trying to short now. And maybe simply trying to build liquidity in here. So we got this high here. Preferably it doesn't take that high. We'll see though. Maybe they try to peek above it a little bit. As long as they stay below this, I'm still looking to see if we can tag a little bit more sell side. Just see what happens closer to the open. So yeah, nothing to do. Go around a little bit. Yeah, do you guys have any questions? Just let me know. right now we're just waiting. We're going to wait and see how this wants to behave in here. We need this to be respected if we're going to continue to be short or continue to look for ideas to go short. It's went fast and then we've stalled out ahead of the open. So shows you that timing's everything. If it gets beyond this 30-minute, it may look to attempt this, but that's not what we'd like to see. I want to now, since we've hit this again, let's see what it's going to do. You know, the hourly overall power 3, you know, looks like it's kind of beginning a slight bullish tone a little bit. Overall, we're still bearish, right? So this could be very short-lived. It could just be to run up here, tag this, and then continue our market maker sell model. But if this thing gets too deep into, you know, this high to that low, right, beyond the 50% and just shows no real hesitancy, we may have to make some adjustments, and then we may come all the way back into this range again, and that would be annoying, right? But hey, something that could happen. But when we're looking at this 4-hour chart, right, we do see that dollar is still moving higher. But when we look at this, right, we're pretty solidly respecting. We don't want to see the whole fair value gap get traded to. Honestly, I don't want to see us break beyond this, right? Because that's literally the daily wick 50% level. Let me just go pull that up so you guys know what I'm talking about. This wick here, it's pulling back into that. We did take the stops here, so, you know, they're kind of pulling back against it. It's been very, very quick. Over the last 24 hours, it's went, what, 700 points or something like that? So everybody's trying to short right now. And we're pre-market open. So they want to punish those people so they can't get in, you know, when the time does come. We do have a failure swing down in here now. Got a swing low right there. We now got somewhat of a stopper aid. We got relative equal lows right here. And then we have the larger level here. And then the one that's even further down there, previous week's low. So yeah, we already took that one. We have another layer down here. And that's a failure swing too. So, you know, looks like we're, again, rooted in the fact that this is a breaker, a bearish breaker. Now we got a bearish order block, 2 changes in state of delivery. All right, one right here, one right here. And now it's just kind of flirting with the lower, you know, lower 25% of the previous day's range. Take it from that high to that low. ICT has said before that the best shorts come from the lower 25% of the previous day's range. That's pretty much where we're at. And if we're bearish, if it is going to be quick, if we are in fact going to blow these levels out, you know, we should be able to stay within that. You know, the thing is too, like, whether they want to take this before NFP or not, obviously that is a challenge with these types of weeks, because you could have a draw on liquidity and it could eventually get there, but it may not get there in the time that you want it to, because the news schedule has landmines everywhere. So yeah, this is going to be very important to see this 30-minute fair value gap hold. If it doesn't hold and it gets beyond it, it may look to attempt to run deeper. That'll be a line in the sand for me. And then until it gets back down below it again, you know, we may have to look to adjust a little bit. It's not quite at that point yet. It is showing some early signs, but you know, this could very simply be from this high to that low, optimal trade entry. Use that high to that low. Where's the thing at? Yeah, there's nothing to do. You know, we could try to force it and push and demand that it moves before the open, but you know, it's not really trying to do much. And at this moment, you know, it could tap this and then keep going lower. You know, we are range bound for the time being. All right, it's going sideways off of a retracement. It did displace, and now it's kind of stuck, right? So it can use this and break down below that little low right here that I have marked out. Right, that'll turn things back on to go short. But if it doesn't do that and it gets beyond this right here, that's our contingency plan. I'd prefer, I'm leaning more so towards, you know, this continuing to go lower. So that's my main focus. But if it doesn't prove to be correct, right, then we'll have to go to our flexibility protocol. And then we could see market maker sell model here. If that fails, we may be able to look at a market maker buy model to target the high up here. It just all depends on how price treats this fair value gap in here. Man. So let's see what this open price does. I think this is going to react. You know, I really am behind, you know, this breaking down. We got these equal lows down here too, so there is money bags right there. And again, all of that changes if we get above this, because then that'll be inversion, and then it'll turn this into a market maker buy model with a failed short-term sell model, which is what we wanted to see. We did break outside of the accumulation level here. I mean, that's a early sign that the sell model may fail. And then once it breaks above this, you know, that's the line in the sand. There's no reason to force sells if that is what takes place. Yeah, we do got a regular trading hours gap above us. It's reasonably sized. Maybe they look to try to target that. You know, if it gets beyond this 30-minute, we got this high and then the midpoint of the current potential regular trading hours gap. Oh, wait a minute, it's huge. A lot of times when it's this big, you know, they don't want to really meet the 50% because it's too far. If it's bearish, right? If it's overwhelmingly still going to be bearish, it could try maybe to 25%. Actually clear some of this up a little bit. Why is it so much? There. Yeah, see, so we got above that 30-minute. So now it's on a rampage now. So we need price to get back down below this in order to feel like we're back in line with shorts. Take some of this like previous off. So let's see how it treats this in here. That's a huge wick. I mean, it was a huge previous day. So everyone's trying to short. Wasn't sure if they were going to want to punch back so aggressively. Clearly they are now. So we'll see how it treats this high here. Because we do got the 50% of that regular trading hours gap, but I mean, that's like way up here. It's not going to be as dynamic to the downside in a smooth manner. It was very smooth overnight. Look at that. So a lot of times that causes a problem. Fast London, you got to be very cautious going with the trend going into AM session. That's why, it's part of the reason why we were waiting. I didn't just assume like, yeah, let's just engage here. So now we'll see. So now we got this high to that low. If it can't break 50% of this and say, we create an order block and then it runs through it again, that's what will potentially put us in line to try to look at the 50% up here. Oh, that's the regular trading hours, 50%. I mean, there's a huge regular trading hours gap. That's undeniable. It's huge. But if it's bearish, they're not going to really need to come all the way up to this. If they come all the way back up there, it's not really bearish, or at least not yet. We'll still be in sideways consolidation. Okay, we got 630 that opened here. So that's our open price. We're above the open price. So if it is bearish, this should be able to break down through these levels. Like I said, if it can get through this again, that's when I'll think that it's safe to continue to be bearish. For right now, though, they're clearly punishing anyone that was trying to chase shorts early. Which again, that's why I didn't say let's take an execution before the open. So I've been waiting, and yet again, that intuition proves to have kept us out of bad trades. Aside from that, there's no entry model in here, unless you're just using an order block or a fair value gap, just any old order block and fair value gap. This stop run here, if we can invert this 30-minute fair value gap again, it becomes way more significant now. Not in the realm of this being a market maker sell model. We may see a little one set up here. Right, let's say we were to go to the 30-second chart, and this does give up and go lower. Then you can look at this little area. If price breaks through it, maybe you get a slight return into it. It's also the 30-minute inversion. And then maybe we see price pick up a little bit, running down to the sell side. See, I think that stop run was all part of the manipulation. Still bearish. Let's see how it treats this. If we just start to rip back to the buy side, this will have been a stop run. Heavy manipulation right now. Yeah, this buy side to sell side, we should get a very dynamic response from this fair value gap. If not, it may not be done trying to reach for the gap up above. And we needed to get down through this in a hurry. Otherwise, it's not trustworthy. So now it looks like we may be more so favoring the buy side up here. So my next potential idea to look at, given this was the last line of defense for me to think short. Now I'm going to have to see it drop through this again. Otherwise, I'm not going to be interested in taking any shorts. It looks like they are reluctant to want to give any more sell side. We've swept out the sell side here, like early stop run. Anyone that got in and was part of this run higher. And now we're just kind of, I mean, this is heavy manipulation. Look, you can see it up and down, up and down. 700-point move, tagged a low, and then creating huge wicks. I mean, that's kind of been the tone, right? So it's high risk environment, NFP week. And it's just it's not worth doing too much craziness. I'm gonna wait till 650, 645 at least, and see what we can get from that. I almost pushed the button here. I wanted to see how it was going to behave. I wanted one more candle to confirm and push. Never got that, so didn't allow me to get into the market. And if I would have, trying to take a short, it would have been a loss, right? Well, that's the thing. That's why I was like, I want to see price get through this and then use it as an inversion. And then it would set the stage for the deeper run down to the initial target. So again, the contingency is the regular trading hours 50%. So once it does this and gets above this high here, that puts this on the table, like I said, right? So now we got a bullish breaker in here. It looks like we're not done with the consolidation behavior. This makes me feel like they're going to wait till NFP to really get us out of this. They need a big news event, I guess. Otherwise, they're just doing this choppy back and forth, consolidated type of behavior. Can you trade this? Yeah. Right. There's a breaker in there. Sell failed. Then you could just simply target something like this, but that's trading into this bearish order block on that daily chart. So you guys know I'm a bit skeptical. If I'm bearish and I'm trading into a bearish PD array, right? Like not shorting from it. Who's to say that it even goes deep into it at all? Who's to say that it goes deep and beyond the wick? Who's to say that it hits the 50% and gives you that reasonable move? That's at least 50-point range. You don't want to take trades in a situation where you don't even have the possibility for 50 points. I mean, that's chaotic. It's kind of unreasonable. So yeah, we really did just drive these people out. So whoever was in short, they are definitely out of the market now. So yeah, anyone that tried to short and probably got chewed up and spit out, they're terrified to even try to get into a short now. Again, because that gap is so huge, if we are sincerely bearish, we are trading inside this order block here. I don't necessarily think if we are going to continue, I don't think it's going to try to get too deep into this. So we got buy side in here. It's offering sell side now. This high to that low's 50% level needs to have price stay above it. Or if it goes down, it better wick quickly and then run back above. And then maybe invert something here that would then offer another potential idea. But I'm more on the side of at some point this is going to give it up. We're inside a macro now too, so I definitely got my antennas up right now. These people have now been stopped out and they're terrified, you can imagine. If they're trying to catch the short. Sentiment in the market is bearish. So that's what I'm trying to make an argument for. Everything is going lower. We have a symmetrical market with price being bearish on the indices. So let's see if we can't get it to pick up here. We're inside the macro now. Again, we got to get through this 30-minute fair value gap. If it can't, we still got to keep possibility of this being targeted on the table. Preferably, we won't even see this high get taken because realistically, if this is going to be a short, this high here doesn't need to be targeted. It's already a balanced price range, buy side, sell side. So in order to confirm that this is going to be a meaningful move lower here, we need this to slide down below this. If not, and we take this high, it may not be done. So we got to see. Getting into a short in here, in my opinion, would be a little bit risky. Well, really risky. But you have had buy side work done already. Dollar is expanding aggressively right now. We are down below the wick 50% here, so maybe that's supportive. It's an order block laid over top the quadrant level. So let's see if it can allow for it. All I know is this is a wild back and forth. Treacherous, right? So let's see what it turns into. So you have that large wick in there, 50% of that. If it's bearish, it should not even come up to that 50%. So 91, 591 shouldn't even be targeted. Oh, say 600 shouldn't even be targeted. That was treacherous. Holy crap. Sheesh. What a nasty back and forth that is. Like, took my eyes off, went to another chart, and I looked back. Holy crap. This is nasty. Yeah, I'm not willing to touch any of this. It is not willing to do anything really reasonable. Any idea that would have been taken in here would have been targeted, and a loss would have been taken down. So yeah, I highly advise that you don't do anything. There's nothing in there to trade. It's just back and forth. So now we're about to get into the macro, so maybe that changes. So is it gonna start opening up now? I think so. See what happens. It's got to stay below that 30-minute. But yeah, this is treacherous waters. Mm. See, can this get another candle that opens up and starts pushing? Like I'm really, really demanding on price right now. It's gonna have to really show me something that is worthwhile. Otherwise, yeah. Yeah, I don't like that. I don't like how this looks. This is treacherous behavior, right? Yeah, there's been a couple ideas that I've been looking at, like, let's see, can it do something? I don't like how nasty this is. Because you got to take into consideration the volatility, right? If you're trying to use 20 to 30 points as your stop, and then like at will, it's flying like 30 points like it's nothing, like 40 to 50 point retracements, I mean, your stop's not going to be able to survive in this unless you open your stop up a little bit. And to open your stop, you're going to have to obviously have a lower risk or lower lot size or contract size. But yeah, you got to make your decision on that. There's nothing in here I want to even touch. It is staying below this 30-minute here. It's ideally what we want. We're inside of a better timing. So we're in the macro right now. But it's very, very untrustworthy. I mean, it looks nasty. Dollars flying off the handle. You know, we got the Dow that was pretty accelerated, did a lot more than what the Nasdaq has decided to do, unfortunately. But hey, it's how it is sometimes. Unless you want to adjust and go to a different asset, you know, you just kind of got to deal with it at times. Yo, what's up, Nico? But yeah, this is the type of condition that continues. I'm more than happy to sit on the sideline and not do really anything. It is holding in here, so I prefer to see it go lower. I'd very much prefer to see if price can stay below these levels in here. Say we leave this high, you know, we could look at this as an intermediate term high. So as long as it doesn't take that out, you know, we should be able to continue with this to go lower. Why is it an intermediate term high? Why is that one that I mentioned an intermediate term high? Because this high is trading into a fair value gap. So again, if we take that out, put this in position to target regular trading hours. It is huge. The regular trading hours gap is massive. So that can't be, you know, that can't be understated or undervalued. Price is not willing to really be one-sided to either direction. It's wiping the floor, seek and destroy. Overnight, it was fast, but today it's seek and destroy, it seems, for today's AM session. Still got a bearish undertone. It's the main focus. But, you know. Yeah, it's reluctant to really give us anything. I mean, we can make the argument that this low to that high is a breaker. This high to that low should be a balanced price range. So ideally, if we are bearish, it's going to be trustworthy. We do not want to see price get too much deeper. Well, we don't want to see a return here again if it's going to keep going lower, and we're going to get a price leg here that is worthwhile. It's going to have to really open up and react and stay away from this because we took stops up here. It's an intermediate term high. Starting to displace. We got a breaker now. So that 50% is definitely something that needs to hold up if bearishness is going to be trustworthy right now. You know, we are inside the macro, so timing wise, price should be able to spool towards liquidity. What liquidity? I think that these are a good candidate. That's an equal low. Purposely set. And unless it's just not going to be bearish, you know, that should get met. Hopefully today, within the next like hour or two, maybe sooner. Yeah, you want to make sure you are very cautious. Do not
over trade and over leverage. If you do, you're going to blow your account. It's a given. You know, it's kind of pump faked both sides really dramatically today. So I mean, you could just imagine. You know, they're going wild. There she goes. Yeah, this one in here, you know, like I said, there's been no bullishness. It's a high risk short position. But hey, you know, if this made sense to you, you know, we've been bearish. So the narrative, whole idea where we think price is going to go, you know, you got context putting you in front of this. So again, it's up to you to try to take an execution. I'm not putting you in trades. I'm not licensed to give you trade advice. But, you know, hopefully my observations telling you how I've been looking at price. You know, I almost took this short. I was being more demanding, needing price to kind of break down a little bit or create another change in state of delivery before I really even considered. And then luckily I had that thought because I didn't execute because of that, because it never offered it. And then it blew past this and I'm like, okay, well, I gotta chill. And then this level in here, we never got the really dramatic response I wanted to see, you know, to really set up a really, you know, nice move from this 30-minute fair value gap. It never offered it, you know? So I stayed out of that one too. And then the timing element, we talked about the timing element. Now that comes into play. And then now that we're in that timing element, you know, I think it offered 20 to 30 in there. But it's vicious. Look at this. It's vicious. It's absolutely vicious. It's not worth touching. You know, no follow through at all. You know, this would have definitely been a deciding factor. You know, if you're going to take 20 to 30 points and you're cool with that, and you just convince yourself that you don't need more than that, you know, you're able to trade these types of conditions. As long as you don't overtrade and over leverage, you know, opportunity is there. You know, it is offered to you. But you got to be content with enough. 20 to 30 is enough, especially in this environment. Because most people aren't even getting 20 to 30 points. What the hell is that thing? Stupid tab. Why is this thing not going away? See, I do still believe that, you know, none of this has changed my mind. We're now back below that 30-minute again. Just seems like this whole move was a wick. Let's see, can this turn into a bearish breaker for a pyramid? Not that you should pyramid in something like this, but maybe I shouldn't call it that. Maybe just like an extra potential opportunity observation. Look at that. Beautiful response right there. That's very telling that we're going to continue.
if it can close like that, obviously. Okay, I did take this trade here. It wasn't 47, it was 43. But nonetheless, in and out. I'm not concerned with catching hundreds of points today. I thought it could potentially offer that. I had a pretty solid expectation or anticipation that, as long as this was to hold that initial framework, if it was to hold and not get us beyond that, it could have been extra bearish. But because it got so deep into this, it's not extra bearish anymore. It's just, leaning bearish, but it's not really giving any follow through. As long as, like I said, this stays intact, I should be able to, potentially continue to hold. Yeah, I appreciate you guys hopping on and sticking with me this far. Hopefully you guys will be getting value. Don't forget to like the video. Sends this video out to more people. Because I'm sure when we go on social media, there's going to be people that have gotten absolutely wrecked beyond belief. I am positive. People are getting totally steamrolled right now. Guaranteed. Yeah, hopefully you guys haven't done anything too crazy. I've been talking about how the risk is very elevated, so hopefully you're being responsible. Again, I'm not a financial advisor and this ain't financial advice, but seems like the whole opinion that we're bearish and the fact that this was going to keep going unless this got taken out, and the fact that, they really ran it up into them, basically allowing for them to want to go lower. Once it broke down below this, you got the breaker there as well. That's why this move could have made sense. It could be a little bit scary, but this is what you're trading in. If you're not ready to handle this insane amount of volatility and you're trying to get 5-point stop losses, even 30 points is sometimes going to be too little. Look at this one candle here. 70 points in 30 seconds. 70 points. If our stop is 30 points, you're done. So it's a problem, right? So yeah, breaker block. I talk about these all the time, beyond motivation. Probably Sunday would probably be a better day for us to go deep and take a deep dive. But all in all, this low, high, price creating a lower low here, that entire down movement is the breaker. But more specifically, the last down candles in here. For a breaker bullish, you got the high here, low, higher high. So when it comes down into it, it should respect that up candles. The breakers are everywhere, right? We got a breaker here, right? This small one. Low, high, lower, low, breaker. And
And of course, the mitigation block is pretty much the same. It's just with a high, low failure swing, and then it breaks down and you target the last down candles. But you have the whole range to go off of for validation. It could wick up into it. As long as it stays below the 50%, it should be able to hold. If it's fast and super reliable and really on your side, you know you're on side when the lower portion of it, the last like 1 or 2 candles is respected. But this is what a mitigation block looks like. You see the respect. Even here. You see the breaker here, low, high, lower, low. And then it comes back with that candle, respects the down candles. So you got this high here. All right, so we got this low, right? So low, high, that takes stops. It took a high here. And then lower low. This is part of the thing that I used, right? In the move that I took earlier that I showed you. This breaker, but then we also have this breaker inside that larger one. So if you get real precise, you see that right at that area, that's where my execution was. Okay? See that? Low, high, lower, low. So that's where I executed, right? But it's inside this larger one. So all these up movements like this, as long as they stay below the 50% from this high to that low, right? That down movement, creating the breaker, it should be solid to continue to drop. Once it gets beyond that, it becomes a problem, and we may have to seek some of the stuff that's above us, right? The regular trading hours gap, 50%, for example. But yeah, this is a shit show, everyone. It's best to just, not push too much, right? Yeah, does that make sense? Beyond motivation. That's how one can identify in the forming stage. So if it's in the forming stage, you gotta keep tabs on what is it reaching into. Is there a liquidity pool up there that makes sense for it to reject and even show this reversal? Right? Is it trading into like a higher time frame PD array, like an order block, fair value gap, any of the other PD arrays? Is there SMT at the highs between correlated assets like the S&P and the Nasdaq? Right? Because let's actually go look around real quick. So looking at these highs up here. So in this instance, see this high right here? Failure swing in the Dow. So the Dow's the weaker. And a failure swing in the S&P. That right there, that's a bearish SMT. So if price is pushing into a level and you could spot bearish SMT like that, many times the turtle soup execution can be trustworthy, but this is what you want to be watching for. Higher time frame PD arrays when price is trading into it. If you're trying to think about how to catch or frame a breaker as it's forming rather than, once it's already formed. You don't have to do that though. And honestly, unless you have 4 or 5 years experience, I wouldn't even try to spend too much time focused on it. Because you don't have to do that. It's a very elevated expectation that's not required to make sure that you spot it before it happens. Just wait till it actually forms. And then, once it trades into it, you now have multiple levels. You have a rejection. You have a change in state of delivery. You got a balanced price range because that's what it is, right? Sell side, buy side, sell side delivered again. So 50% should not be traded into. And, you can see how that holds up in here. And if that starts to be given up, you're breaking a breaker, but you're also breaking a balanced price range. So that's why things turn off, right? And that's how you can look to go be flexible the other way. And every PD array that ICT teaches, at least the main ones that he talks about in the PD array matrix, every single one of those can be turned into an inversion. So if you have a bearish breaker that fails, just look to see that as an inversion, and then try to look, once it gets broken, try to look for a breaker going the other way, right? So we've got these equal lows here. That's very suspect. I don't think they're going to leave that. We're still respecting the bearish narrative, right? It's just very nasty sideways. They're not willing to really go anywhere, right? So did I answer your question, brother? After immediate high, 50% shouldn't touch. Yeah. Yeah, that, but with the breaker, you also can just use the start of the breaker that you observe, right? You could take this high to that low, that 50% also should not be traded through on a closing basis. You see how perfect it respected it? It's because it's not random. This is what's actually going on and what you should be referring to. So yeah, once a breaker forms, you got a stop run. You have a buy side, sell side delivery. And then once it trades into that, 50% of this should not be traded through. You can give it a little bit a leeway, like it could run through it a little bit on a wick basis. But once it closes beyond that, right, it becomes a problem. And you also have this low to that high, the entire range that creates the breaker. The most sensitive portion is going to be the lower 25% of the breaker. 25, 50% of the breaker candle, right? Or just the whole breaker zone in itself. Lower 25%, that's where the most sensitivity and price should be, closing at, right? It should close there, right? If we take this, measure that out, the lower 25%. And that's where all the sensitivity has occurred. And until that's given up, we hold on to that idea. So yeah, did that answer your question? Hopefully that was easy enough to understand. Again, appreciate you guys for hanging out with me this morning. Don't forget to like the video, subscribe to the channel if you haven't already. Only if you get value. Don't just like it because I'm telling you. If you don't get value, then don't like it. But if you do get value, if you could do me that favor, that'd be awesome. So yeah, we should really start to pick up in terms of what price is trying to do at this moment. If it's going to go lower, we should get this new 4-hour candle that's forming in here, which is what happens at 7 a.m. Pacific Standard Time. So we have a 4-hour open price here. So if we're going to have a bearish trend from that 4-hour candle or 4-hour time frame, or just simply on this higher time frame, like in general, right? If it's going to be bearish off of this, we already ran up aggressively. So, let's see if this 4-hour candle can open up a little more for us. See if we can get this to run. Everything has held up in terms of our analysis and our observations, like what we think price is going to do. It's just been a nasty move. And again, time is everything. Time comes out and look what's happening. It's a little bit more clear. So waiting was the best idea.
Man, I got such bad allergies. Just irritating. I got a headache. Beyond motivation said it makes. Okay, cool. I'm glad it makes sense, brother. Appreciate the question. But yeah, eventually price submitted to what we want to see price do. So that's always good. So let's see how sustained this is going to be. If you look at this 4-hour chart, we may have a reasonable sized range that may come as a result of this. We already got a rejection from this up movement. That's a bearish order block on the daily. Wicked up into it, left the upper portion available. Now we got a 4-hour candle that opened up, rallied right up into here, and then now it's just picked up to drop after we took stops up here very aggressively. So this low, speaking about what we talked about earlier, this whole area in here, right, this low to that high, breaking down below, we got buy side, sell side. If this is going to continue, this should be a balanced price range. It shouldn't come back to the 50%. If it does, this high gets in jeopardy, and then we got the regular trading hours gap. Otherwise, it should continue to remain bearish as a result of that. Okay? So yeah, you're gonna have to send that to me. Send that to me in DM. Beyond motivation. With your journal. Did we look at Bitcoin last week? Tony, if you're here, can you let me know? I know we looked at gold and silver. Can't remember if we. Yeah. Oh, I think we did. I think we looked at XRP too. Weekly for value gap versus to take sell side liquidity. The probability to get price at higher side is more. Yeah, I think that there is intentional manipulation happening right now. XRP is the sleeping giant, in my opinion. Bitcoin's going to have its place, but like I think long term they're all going to go up. You know, ICT could say that they're all going to zero, all he wants, but you know, none of us are perfect and right about everything. So, you know, he doesn't do a lot of deep dives into what crypto actually is. He just knows surface information and memes and whatnot. I mean, the central bank digital currency thing is definitely a problem. But why not, you know, invest something that you're comfortable with? I'm not encouraging you guys to do any of that, but you know, I have my investments. I don't encourage you to copy me, but I do encourage you to look into things like XRP, Bitcoin. Try to understand it a little more than surface level. It's definitely worth considering or thinking about. And I mean, I guess we could take a look at this. Yeah, I'm in a pretty nasty short right here with the Nasdaq. I was able to smack this right here. Pretty beautiful short position. Up 2,000. Pretty nice if you ask me.
2,000 in my funded account, 600 in my personal account. I think that's a good day's work if you ask me. And I waited. We didn't take any losses. Not one loss was taken because we waited. I hesitated for good reason. And now we're deep in the green right now when price opened up at the right time. Gamblers got chewed up and spit out. Professionals took advantage and see things clearly. But, you know, what do I know? What do I know? Right? We only do this every single week. But yeah, hopefully you guys have been able to make sense of this stuff based on the things that we've talked about today. I appreciate the question, by the way. Let me actually go do this for you beyond, let me see. Yeah, motivation. Let's go look at, oh, actually, I could just do it on the gold chart. Bitcoin. Yeah, so I still think that there is still some ways to go. Still think that we got a good amount of, you know, downside unless the Clarity Act passes. If the Clarity Act passes, this thing is going to use this as liquidity, accumulate, and then just absolutely explode, I'm sure. Same thing with XRP. If we go take a look at the quarterly perspective, it's beautiful, you know, sell-off, liquidation, and then possibly look to, you know, maybe it looks to go lower ahead of the Clarity Act. But once that comes out, trillions of dollars is going to come into tokenizing assets and, you know, just the availability to, you know, large investors and the clarity for large investors to know that their investment is safe. And it's going to, you know, just make it a pillar of everything. And that'll probably begin the reserve for the US with crypto. They'll start building their reserves and whatnot. So, you know, who knows if it goes to zero later on in life, you know, with this and with the life of this asset class, who knows? But why would you miss an opportunity if it's reasonable to learn more about this? Why would you miss that opportunity to learn, you know, and see what kind of opportunities are available? You know, just because people say this and say that and have opinions, it doesn't mean that you have to adopt those people's opinions. You got to be an independent thinker, you know. So, yeah, I do think that XRP could continue a little bit further. Maybe not. Preferably it doesn't, and it holds up above the 50% here. And if we look at this from the quarterly chart, that's where this fair value, yeah, I remember we did this analysis. So depending on how it treats this quarterly fair value gap, it's going to be a very strong deciding factor on whether I think price is going to keep going lower or not. Like if we break down and get below this, I mean, I'm still looking to see, you know, even deeper price delivery. The hell is my thing at? There it is. So we already hit 2.5 standard deviations, started a retracement. I think we have Like we could literally get all the way down to there, honestly. See, let me go back to what you said. Good morning, Fancy. Buy side liquidity and wait. I'm anticipating a price move higher, sweep the buy side liquidity, and reverse the take sell side. Yeah. Okay, I didn't read your comment thoroughly enough. But yeah, we talked about that. Was it last week too? About how we think that it could go lower. I think it's more likely to continue until the Clarity Act comes out. Think about it. Something that's coming out, that's legislation. It's going to provide clarity and basically, you know, all the foundations that crypto needs to thrive. And then in anticipation of that, everything is tanking off the face of the earth. I mean, if you were smart money, wouldn't that be what you want? Right? Isn't that like right in line with something that makes sense for you to take advantage of if you were smart money? I mean, it just makes sense because now they get to load up at even lower prices again. You know, they know this isn't going anywhere, at least within the next, 5-10 years. There's too much money to be made. We'll see, right? Obviously anything can happen, but I mean, there's been so much opportunity, and it's going to revolutionize everything, especially XRP. XRP is going to, I mean, there's so many things XRP and XLM and some of these other technologies are going to improve upon. I mean, it's mind-boggling. It really is. So they're going to be here. They're trying to revolutionize the banking industry. So everything else has been upgraded. So it's about time that the financial industry gets upgraded too. That doesn't mean they're going to change the algorithm, right? If they were going to, the stuff that ICT teaches wouldn't even already be showing up in Bitcoin and in these cryptos. It wouldn't be here. It already wouldn't be here. Right? So yeah. Yeah, I think that'll continue to drop. Look at that. Perfect decline. Of course, the Nasdaq it was kind of the slower mover, of course. Right? But we'll see what happens. See what happens. And maybe they get a big pullback right now. Wouldn't doubt it. $409. And preferably it doesn't go beyond 409 in there. Very interesting stuff. Huge. Wow, that's a big jump, huh? I didn't even notice after I got out. Looking at Bitcoin. Yeah, what a huge reversal, huh? Oh, not a reversal, but a retracement. Again, we're back inside of a breaker now. I mean, it's a larger breaker too. Look right here on the 4-hour. The low of this wick, that's a breaker in itself. It's respected. And then we got this on a lower time frame basis. We got a low, high, lower low. We had the smaller breaker in here too, right? Low, high, lower low. And then we have this one in here too. So now it's just simply returning back into this. So we'll see what happens. We had SMT at the highs up here, as you could see. That led to the solid decline. Definitely amplified the fact that this breaker was going to hold. The fact that there was this SMT in there. We got this fair value gap in there. Let's see how that's treated. If it trades through it aggressively and maybe looked at as an inversion potentially. Then we got the previous week's low down here still. Measure this out real quick. Let's go get the 50%. I'm not sure if it'll blow past the 50% of that. Asia. So yeah, we'll see what happens with this. We have the 50% down here. What I just mapped out. We hit the 25%. Not sure. I don't really know if we're going to break this entirely from today. It's already ran so much. You know, it does have its limits at times. It could do whatever they want, but you know, we're ahead of NFP. You know, they could build up the liquidity down there and then target it. You know, come all the way back again like they've been doing. But you know, we're also not in the macro either. So just simply looks like a reversal to me, or retracement to then come back to something reasonable like this. Got displacement, rebalance, and then possible redelivery. Because we got accumulation in here, manipulation above the high, distribution, rebalance, redistribution. Right, so you know we're currently in in an expansion portion of things. You can just see it, unless they're going to decide to consolidate more. With NFP week, that sometimes could be the case, but we'll see. I'm going to just stick to the opinion that we're going to keep going lower. Maybe it retraces a little bit. Now, if it breaks through this and inverts that, you know, we may look to try to get back into this range again, which that is not a very very nice condition to trade within. Damn, that was violent, huh? Look at that. Whew. Dude, Nasdaq is really quick. All these indices are flying. You know, like almost every candle is, you know, breaching like 20 to 30 points right off the bat. Just like flying off the handle. Every 1 minute candle. Pew, pew. Little bullets flying everywhere. Got to be very precise. Know exactly what you're looking for. Like in this instance, most conservative idea would be, okay, well, that's a potential, low high, lower low breaker. Should stay in the lower portion of this. It should react very aggressively. We should not have any support at this level. It should just slide on through it and then get down below this low and then use that as a breaker as well. Right? So yeah, I'd be waiting in here. Let's take a quick peek at the higher time frame. There is a slight SMT in there. But man, it is on a rampage going to the downside. So we're going to have to just be very observant to that. Let me see. How do I... That's freaking massive. Huge regular trading hours gap. So yeah, I don't think it's really going to have much of a interest in getting up there, unless it like breaks beyond right this low to that high. Could see that breaker in there. Low, high, lower, low. So now it's returning back into that. So if you think power 3, you go from 6 a.m., drag it out for the hour, rallied up above it, took stops, hit the regular trading hours lower portion. We're also in the lower 25% of the previous day's range. We got a pretty clear draw on liquidity. It could look to really target that. We'll see. We've got a stop run. There was, ooh, look at that. There's SMT right there. Didn't even notice that yesterday. Or earlier. Nice. Yeah, how did I not notice that? Oh, wait. Oh, I noticed it. I mentioned it earlier. We were on a lower time frame, though. So it looked a little more busy, like a lot more candles. But yeah, that's clear as day right there that the SMT was going to hold price and bearishness would prevail. All the early price delivery was down in here. All that, all the observations that we did, right? All the potential ideas we called out, all down here on those super low time frames. This is what it looked like on the bigger picture, a little bit bigger. 7 minute. This wick in here, you see how that's respected? See this low to that high. Notice how the 50% from that low to that high is not even being contested, really. They're trying to, right? It's just giving a pullback here. I think this is all just to set up a short-term premium relative to where price is at to then continue to go lower. This is our main objective.
It's that previous week's low. See that wick right there? That's really nice. I really like that. See if we can't get another leg lower here. It's an illogical level to do so. All of this should act as a BPR. We should get a market maker sell model potentially to set up, unless it's going to look to try to break back to the upside. But I'm not too sure how confident I am in seeing that. It's going to have to prove it. See that? That's a wick right there. It's a daily wick. Got a low here, high, lower low. So preferably price stays below this. If we can get that to be a failure swing in there, breaking down below this also gives us context for a mitigation block. High, low, failure swing, breakdown. It's also a type 2 dealing range. Assuming that that was going to continue to hold. But yeah, do you guys have any questions? I think we've done quite a bit this morning. Pretty solid morning, so yeah. Hopefully you guys learned a lot. What the hell was that? Let's see, so no one has any questions. Okay.
All right. Well, I think I'm going to wrap it up here. We've done quite a bit. It's a pretty decent morning. Not too bad, if you ask me. Early on, it was a shit show. Definitely a setup, trying to mess you up, right? Kill the gamblers before they could do anything. But patience pays. No worries, Maddie. Appreciate you hopping on, brother. But yeah, with that being said, guys, I guess that will bring the call to a close. Keep your eyes on this. I'm going to keep monitoring this throughout the morning. Maybe we can get price to dump off, and maybe you can do something once more. Otherwise, if you've done something already and you were able to take something down, there's no reason to push too hard. Mind you, this ain't financial advice. You got to make your own decisions. But again, hopefully today was impactful. Let me know if you guys need anything. We'll be back live again here on YouTube on Sunday. And, I'll be in the free Discord and in the private group, keeping everyone updated, all right? And those of you in my private group, I'll see you guys bright and early tomorrow, okay? So, yeah, God bless you guys, and I'll see you next time. Have a good rest of your day, you guys.